Hello, everyone. It is 11 o'clock. Thank you for joining today's webinar. We'll be diving into the hot topics in Canadian trade compliance. We will be covering a variety of topics that are on the top of minds for importers and CBSA. So without further ado, let's get started. My name is Ann Meredith. I'm a Senior Marketing Analyst for Customs Brokerage at UPS Supply Chain Solutions, and I'm excited to introduce today's speaker. Penny Moulton, who is the Director of Customs Brokerage and Compliance at UPS Supply Chain Solutions Canada. Penny works with multinational companies and stakeholders to assist them in navigating Canadian importing legislation. Penny holds a Bachelor of Business Administration degree from Yorkville University with CCLP, CCS, and CTCS designations. She currently sits on the Canadian Border and Customs Consultative Committee with the Customs Border Services Agency. Thank you, Penny, for joining us today. So before we get started and get into the agenda, here's a few administrative updates. This meeting is being recorded and will be made available to anyone who registered after the event. We encourage participation and would like to ensure we answer your questions. So please use the Q&A function at any point during the call. We actually have Kathy and Parama from Penny's team that will be answering questions during the call. So be sure to utilize that function. We'll try to our best all of your questions answered live on the call. And if necessary, we'll contact you privately after. For legal purposes, I'm going to read the following message verbatim, and then we'll be ready to start today's great content. This presentation is for informational purposes only. It does not constitute legal advice. Please consult with your own legal counsel for such advice. Do not rely on this information without performing your own research. Okay, now let's take a look at the agenda. As you can see, it is a full agenda. First, Penny is going to talk about CBSA assessment and revenue management, or as we know it, CARM, Release 2 update. She's going to be talking about forced labor, Canadian customs valuation, CBSA awareness on contraband, and she has some pretty staggering stats to share on that. She'll talk about Spain plastic regulations, CBSA mutual recognition agreement with Europe, comprehensive and progressive agreement for Trans-Pacific Partnership, or CPTPP, and finally, CBSA trade compliance verification tools. And then she's going to leave us with some key takeaways from all this great content. So, like I said, there's a lot to cover. I don't want to take up any more of her time, so I'll go ahead, Penny, I'll hand it over to you to get started.
Great. Thank you, Ann. And as you said, a very, very full session today, but I wanted to start with CARM. I know many of you on the call, or a lot of you have heard about CARM, CBSA Assessment and Revenue Management, that was supposed to go live in October of 2023. But as we all know, that has since been changed. The go live date has been changed to May of 2024. So in May 2024, it's mandatory for all commercial importers to be registered on the CARM client portal. If you haven't already registered, I highly recommend that you do and become familiar with the portal. And further in the presentation, I'll talk about making payments and things like that. CBSA, they have verbally stated to the go live will be May 13th of 2024. However, we need to wait for a regulatory package approval from CBSA to get the confirmation in writing. So that's the way it stands right now. But again, we need to get something in writing from CBSA for that date. And just kind of a reminder is to ensure that others in your company who need to have access to the portal, the BAM has granted them the access. So CBSA published what we heard report for the CARM regulatory package. And it summarizes some key themes and comments submitted in relation to the CARM regulatory package. So with that, there is going to be some updates to that package. And in October, there'll be some updates to the CARM client portal. Some trade chain partners will continue to test the system to ensure system readiness for all TCPs to test the system. And I was recently in a meeting with CBSA and Trade Chain Partner Working Group, where the theme is to register now and delegate access to ensure that you're ready for May of 2020. So also, when I wanted to talk a little bit about making payments in the CARM client portal. So for the accounts and profiles, once you're registered in the portal, it's important that you are able to look. You can look at your statement of account. You can see all of the details related to that, but just making sure that you're, if you need to make a payment for an individual file, which could be an AMPS penalty, it could be a number of things, but just making sure that you're able to make that payment in the CARM client portal. So I'll talk through a little bit about that. So what you do is you go in and you can make a payment and you enter the amount you'd like to pay, but you don't put any dollar signs or anything in like that. And just making sure that the payments are made, and you contact your service provider, because you don't want to make a payment when the service provider has already made a payment. But what I will say is that sometimes, you know, if there's corrections or adjustments or anything like that completed, they're not probably going to be paid by the service provider when they're submitted. And the reason is because CARM will overall, it's hard to say how long it will take to do those corrections and adjustments, or for customs to process it. And because of that, a lot of service providers aren't making updates or changes to the CARM client portal. So we're making the payments for those individual files. So that's why it's important. You can make those payments once they're processed, and you'll be able to see that. All right, and so the when you make the payments, you apply the credits as a payment. So you may have situations where the corrections have been processed, and maybe you're due to get back duty and taxes. So if that's the case, you can actually apply the credits as a payment. And that way, if you're owing $500 and there's a $500 credit there, you can take that credit into account. But again, I just urge you to work with your service provider. And the reason is because you don't want duplicate payments. So once you've determined that you are going to make a payment for a correction or adjustment, or another payment for another file, you just click on it and you're able to pull up that invoice, and then you process the amount. All right, so we'll talk about forced labor and child labor. So the legislation and its reporting obligations apply to any private sector entity that is producing, selling, or distributing goods in Canada or elsewhere, importing into Canada goods produced outside Canada, or controlling an entity engaged in either of the above activities. If you're a commercial importer, you will be caught, so it's important to make sure that you're going to follow this. So I wanted to bring it up. Bill S-211 received royal assent on January 1st, 2022. And it's forced labor in Canadian supply chains, and it's by the public safety. And it's just important because it's going to come into effect on January the 1st, 2024. And it contains two parts, so I'll go through those. The first part of the act imposes changes where it's an obligation on certain entities and government institutions to submit an annual report to the Minister of Public Safety by May 31st of each year on the steps taken during the previous financial year to prevent and reduce the risk of forced labor or child labor, whether it's used by them or in their supply chains. So understand your supply chain. But the reports, you can do electronic registry with Public Canada's safety website, or a summary of the information received will be tabled in an annual report to Parliament by the Minister of Safety. So the second part amends the customs tariff to expand the prohibition and importation of goods mined, manufactured, or produced in whole or in part by forced labor, to also include child labor. The act applies to any corporation, trust, partnership, or other incorporated organization whose activity include producing, selling, or distributing goods in Canada or elsewhere, importing goods into Canada, or controlling an entity engaged in these activities. Additionally, the entity must be either listed on a stock exchange in Canada or have a place of business in Canada, do business in Canada, or have assets in Canada that meet two of the following three criteria for at least one of its two most recent financial years. So it would be 20 million or more in assets, 40 million or more in revenue, 250 or more employees. So if that applies to you, I suggest that you go to the Canadian Public Safety website to get more information. So the Uyghur forced labor, these are some statistics that came up recently. So CBP published this, so US Customs, and there were a total of 2,739. 471 of those were denied, and 981 were released. And you can see, obviously, US Customs is really focusing on forced labor and child labor as well. So the shipment count by industry and exam results. So for electronics, you could see almost 2,000. Apparel, footwear, and textiles, 733. Agriculture products, consumer products, and mass merchandising. You can see the differences, but 1,608 shipments were released. 679 shipments were denied, and 1985 shipments pending. So you can see the shipment value in US dollars by country of origin, with Malaysia being the top at $834.7 million. So Canada Customs valuation. CBSA in the Canada Gazette, which is the Government of Canada newspaper, posted amendments to the value for duty regulations. So it's called Bill C-30, and there was comments until July 26, 2023. So under the current legislation, most importers determine the value for duty when using the transaction value method, which is based on the price paid or payable to the vendor in the sale for export to a purchaser in Canada. Pursuant to 48(4) of the Customs Act, goods are sold for export to Canada with additions and deductions, but generally speaking, it's the transaction value. And the additions and deductions can be made to the price to arrive at the transaction value of the goods. But sold for export, as it's defined, or as it's stated, is not defined. It has been interpreted by the Supreme Court of Canada to refer to the sale by which the title passes to the importer. And there's an example, the Canada Deputy Minister of National Revenue versus Mattel Canada, and it's from 2001. But the regulations amending the valuation for duty regulations will essentially change the definition of the term sold for export to Canada and valuing the goods based on the last sale in a series of transactions, resulting in the importation of goods into Canada. So if adopted in their current form, draft amendments will cause an increase in the declared value for duty and subsequently amounts of duty and taxes payable when goods are imported into Canada. If the importer in Canada has agreed prior to the importation to sell the goods to a customer in Canada, the importer must use its selling price rather than its purchase price as the basis for value for duty. So again, this is what's being proposed, but I wanted to make sure everybody was aware of what's being proposed. So as an NRI, imports to the goods to fulfill an agreement to sell to a buyer located in Canada, when calculating the value of the goods based on which duty and taxes are payable, an NRI uses its own purchase price of these goods for the purpose of calculating the value for duty, rather than using the price to the buyer located in Canada. For the NRI in this case, its own purchase price of the goods is lower than what the buyer located in Canada would have paid. Therefore, the NRI values the goods based on a lower price, and as a result pays less in duty on these imported goods. The NRI is able to do so under the premise that the importation was made for stock inventory purposes, even though the goods have already been contracted for sale. Again, this is what is being proposed. I just wanted to make sure that everybody's aware of what's being proposed at this point. But this slide just shows that Company A, which is located in Canada, purchases goods from Company B, located in a foreign country. Company B then contracts with Company C, also located in the foreign country, to fulfill the order. The goods in this case are subject to 2 sales. One from Company C to Company B, and 2 from Company B to Company A. The goods are shipped directly from Company C to the Canadian Company A. Both sales are considered to have occurred prior to importation. Sale 2 is the sale that causes the goods to be exported to Canada, and this is the last sale in the supply of the goods to Canada. Therefore, it would be considered the sale for export to Canada and used to determine the transaction value of the goods. So CBSA awareness on contraband. So I was actually at a meeting, a BCCC meeting, where CBSA shared these slides, and they allowed me to use those during our webinar today. So I just wanted to review those. So the CBSA's commercial examination program is necessary to support Canada's national security and safety priorities. So the examinations control the movement of goods suspected of national security threats, contraband smuggling, other government departments, controls, commercial compliance. In the past 5 years, this program has prevented approximately $1.8 billion worth of drugs and contraband from being smuggled into Canada. Risk assessments, advance information, screening and targeting gives focus to possible high-risk goods. The CBSA is committed to protecting communities, preventing illicit drugs from crossing our borders, and combating organized crime. So just to give you an idea, for the year 2023, they recorded a 134 significant seizures valued at more than $800 million, one of the highest yearly value seizures the agency has recorded. The total was contributed to major seizures of narcotics and tobacco in our commercial, marine, air, and highway operations. So the value of the seizures, just for information, for highway, it was $90.9 million, air, $27.2 million, and marine, $718.3 million. So the methamphetamine, in 2023, they found 6,330 kilos of methamphetamine, which was discovered within jugs labeled as canola oil, destined for export to Australia. The 419 jugs containing liquid methamphetamine, and there's 3,000 kgs of liquid methamphetamine, enough to fill 35 large suitcases, is in the Canada's largest methamphetamine seizure to date. The seizures can be attributed to the collaboration of multiple CBSA units and domestic international law enforcement partners. So the next one is for the Marine Spotlight results on opium. It resulted in nearly 2,500 kgs of opium. a range of detection tools were utilized, including X-ray technology, which assisted in the examination of 19 marine containers. Officers discovered irregularities in the shipping pallets within these containers as part of a deep concealment method. So you think about, being Partners in Protection approved or CTPAT approved, or thinking of going through with either one, PIP or CTPAT. This is, you would do what's called a 7-point inspection. And that would make sure that, you're checking your pallets and your shipping containers when they come in, to make sure that there isn't, in a case like this where, there's opium under the bottom of the pallet. You could see very ingenious as far as a drug smuggler goes, but the drugs were discovered inside the footings of the blue shipping pallets. So an update on the Spain plastic regulations. So in January 1st, so of this year, Spain has approved a new tax on non-reusable plastic packaging. So non-reusable, obviously, if it's reusable, then the tax won't apply. But it's applicable on manufacturing, importation, and intra-community acquisition of non-reusable plastic. So the definition is plastic containers, semi-finished plastic products, and plastic products aim to facilitate the closing, trading, or presentation of non-reusable containers. There are a few exemptions, but just wanted to make sure that you were aware in case you're shipping to Spain. But the tax rate is 0.45 per kilo. So the CBSA signed a mutual recognition agreement, MRA, with the EU. So again, if you're PIP approved and you're shipping to the EU, then you would get the mutual recognition. So what it means is that they're honoring each other's mutual recognition agreements. So like I said, it's PIP. And then with the European Union, so making sure that your shipments will get cleared faster going into the EU, so you won't need to have your shipment detained because you're showing that you've already a trusted trader and you have those processes and procedures in place. So CPTPP updates. So that's the Comprehensive and Progressive Agreement for Trans-Pacific Partnership. And that includes 10 different countries in the Indo-Pacific. So that's Australia, Brunei, Chile, Japan, Malaysia, Mexico, New Zealand, Peru, Singapore, and Canada, and Vietnam. And recently, Brunei was signed as part of the CPTPP. And just to give you an idea, so there's a lot of opportunity there if you're shipping to Brunei. But certainly they have a lot of new telecommunication infrastructure and trying to get investors at this point. So the top Canadian exports to Brunei from 2016 to 2018, this is in Canadian dollars, So aerospace at 3.1 million, industrial machinery at 886,000, electronic and electrical machinery and equipment at 816,000, agricultural products at 563,000, and chemicals and plastics at 173,000. So you can see, and these are just the top exports. But if you're in any of the industries and you're looking to, you know, potentially ship to another country, and you're PIP approved, or you would be able to take advantage also of the CPTT duties and tax rate. So certainly much lower. So the CBSA trade compliance verification tools. I just wanted to really point out here that CBSA will be, should you get a trade compliance letter in regards to an audit or in regards to anything like that, customs are still sending them by mail, so the old-fashioned way, and the address they're sending them to is the address that you have with CRA. So I wanted to point that out because many locations are still working remotely, and therefore it's important if you've got somebody in the office that they can scan that to you or to where it needs to go. Because the last thing you want is, you know, you go to the office once a month or something like that, and there's a verification notice from CBSA that was supposed to be answered a few days before, or a few weeks before, something like that. So the new tools being introduced is called a trade advisory notice, a directed compliance letter, and a compliance validation letter. And what CBSA are trying to do here is focus on one or two transactions rather than for the past 4 years, or go back 4 years and you know had a duty-free product or you thought it was duty-free. You would then find out you were supposed to be paying 6% duty on it. So just making sure that, you know, this will promote voluntary compliance, because it's only going to focus, like I said, on one or two transactions, but it's certainly an early correction of errors or mitigating future costs. So there's the trade advisory notice, which is known as a TAN. It's really a nudge from CBSA. They're just requesting or asking further information. You don't have to respond to the TAN, but I certainly recommend that you do respond to CBSA. There's no monetary assessment issued as a result of the TAN. And then there's the directed compliance letter, which addresses instances of known non-compliance. A letter to the importer accompanied by a monetary assessment. And then there's the compliance validation letter, which addresses instances of suspected non-compliance. A letter to the importer with request to provide information to the CBSA within 30 days. These were all effective January 1st, 2022. I can tell you that a lot of importers are starting to receive these. Eventually, once CARM is underway, so after May, they may start earlier, but customs will be posting these on the CARM client portal. So you'll be able to see these notices there, as well as any AMPS penalties or anything like that. They will be posted on the AMPS or on the CBSA CARM portal. So CBSA verification priorities. So CBSA have verification priorities, and what they do is they focus on specific commodities. And those commodities are ones where they're finding that importers are often misclassifying. One is, for example, a plastic cell phone case. A lot of importers were importing that as duty-free, and it turns out that there's actually 6% duty on it. So you can imagine the cost to the importers having to go back 6 years or 4 years to correct all of the files. But I did just pull the information from the trade compliance verification site on CBSA's website. And just to give you an idea, so for valuation, so they will target either classification, valuation, or HS. But in this case, there was one for valuation. They targeted 274 companies. There's 252 cases closed, 143 cases with errors, and the percentage of non-compliance is 52%. But out of that little exercise, CBSA total revenue, which includes self-adjustments by the importer and penalties, came to $88 million. For the classification piece, there was 32 commodities targeted, 1,165 targeted companies, 1,080 cases closed, and 2,245 of those cases were with errors, or 75%. So that totals a little over 276 million. So if I was an importer, I would want to be making sure that the classification that I'm using is the correct classification. So with that being said, you can get rulings, so you can have your service provider work on getting a ruling, and that can be done actually now through the portal, so it can be done electronically. But if that's, that gives you a peace of mind, and you don't need to worry that, down the road, customs aren't going to decide to do a verification on whatever it is, and you find out that, it's been misclassified for the entire time. So just some key takeaways. Understand your supply chain and where your goods are sourced. Especially when you think of, forced labor, child labor, that kind of thing. And just, if you haven't already, register in CARM and delegate access to your service provider. And also have the other folks in your company be able to make sure that they can have the access if they need it. And you can give them whichever access you want. But for example, in your finance department, they are going to need access to be able to make those payments directly to CBSA. I know some NRIs have come to me and mentioned that, the banks that CBSA have listed aren't any banks that they deal with. So I can tell you that CBSA are actively looking to implement more banks where payments can be made. And also, a lot of companies are asking about the CARM bonds. They're not ready yet under CARM. And when I say that, they're not ready to be done electronically. So as I mentioned earlier, the regulatory package, CBSA are waiting for approval to get done. Part of that, as I said, is digitization. So making sure we can do those CARM bonds electronically. But that's one of the reasons that CBSA are giving that 180-day grace period. And what that means is that for 180 days, you won't be required to have a bond in place. And that's in case the CARM bonds aren't quite ready yet. Can you get a bond right now? Absolutely. It will have to be done the paper way, the way it's in legislation, in the regulations, that's how it needs to be done. So, and it would not include GST, where the CARM bonds include GST and duty. You take 12 months of data and the highest month, and you divide that by 2, and that's the amount for your bond. The valuation changes. I know many of you on this call are shaking your head wondering about those valuation changes. There are going to be further updates, especially from the comments that were published up until July 26th. So CBSA will publish further information on that, but you can refer to the Canada Gazette for that. And we will be publishing any information that we receive once it becomes available. And then, like I said, make sure that if you're working remotely, or maybe you're working out of the US and your company's in Canada and there isn't really anybody from compliance in Canada, just make sure that you're getting that information timely. Get it scanned to you if there's anything from CBSA. And then just look at your overall goods that you're importing into Canada and determine if any goods imported into Canada fall on the trade verification priority list. As you can imagine, as long as CBSA are continuing to make money because things are misclassified, they're going to keep them on that verification list. So just because they're there this year doesn't mean they're going to be gone next year. And that's really what CBSA are looking at. Again, if they're continuing to make money, they will keep them on the verification priority list. So if you have any questions that we won't get to today, we'll certainly try our utmost, as Anne said, to answer them after the webinar. But if you have any other questions or anything like that, you can reach out to carminfo@ups.com and tmscanada@ups.com.
Yeah, thank you so much, Penny. This has been great information. I see that Kathy and Parama have been very busy answering questions in the Q&A, so that's great. Penny, we did have a couple of questions for you. The first one, do I have to do something as an importer in October 2023 for CARM?
Great question, Anne. And October 2023 was the original go live date, which has since been moved to May of 2024. But service providers will continue to test. But from an importer standpoint, you don't need to do anything specifically in October.
Perfect. Okay. And the second one, what is the deadline for posting financial security?
So in this case, it would be May 2024 plus 180 days. So you have the 180-day grace period. So it wouldn't be till after 6 months after that.
Okay. Awesome. The next one, if I pay a payment on the portal, is it applied immediately? Sorry.
Yeah, and that is a question that I get often as well, Anne. And so if you make a payment, and as we went through at the first of the webinar, and you're paying a specific transaction, and say you make that payment today, you would think it would be posted today. It actually depends on your bank. So how long does it take your bank to make that payment, to process the payment? Some banks it's immediate, and other banks it takes 3 to 5 days. But I just suggest that you work with your bank to find out that how long it will take.
Great. One last question. Can my broker use their bond to clear shipments and accounts for good once CARM is live in May 2024?
One more time, Ann.
Can my broker use their bond to clear shipments and account for goods once CARM is live in May 2024?
So the broker bonds will be no longer. So as an importer, whether you're a resident importer or a non-resident importer into Canada, you will no longer be able to use your broker bond. You'll need to get your own method of security. And when I say that, that could be a bond. It could be a cash on account. It just depends on your business. So overall, from a bond standpoint, the minimum amount is 25,000 and the maximum amount is 10 million. So if you're an importer and you're only importing, $10,000 a month into Canada for duties and taxes, then you may want to look at getting a cash on account. But if you're importing 25,000 or more, that's when you would get a CARM bond, as they call them.
Gotcha. Okay, thank you. Okay, so I want to thank everyone for joining us today for this webinar, and Penny for taking time out of your day to share such great information. If you'd like someone from EBS to contact you after the webinar to discuss your customs brokerage or trade compliance, please complete the pop-up survey that will pop up at the end of this call. So with that, everyone have a wonderful rest of your week, and we look forward to seeing you at the next webinar.
Thank you.
Thank you.